If you're consistently losing money inside financial markets, be it the stock market, Forex, crypto, commodities, or any other market, you are a victim of Rule 764. 764 is very important to understand. It means that you have high levels of fear or no levels of fear. We're going to talk about this and what you can do about it in this video. It could potentially change your entire life. A lot of people aren't successful because they have such a high level of fear that they're just spectators, or alternately, when they see red price action, they run away from the market. Other people literally have no fear at all. We call those people gamblers. You should have fear inside financial markets, but just not too much. Unfortunately, spectators, runners, and gamblers all end the same way. A complete loss of funds. Smart money is completely different. Smart money has fear. Don't ever think that smart money does not feel fear. They do. However, they use knowledge, experience, emotional control, systems and processes to convert fear into courage. Courage is not the absence of fear, it's the ability to act despite experiencing fear. It's this smart money line that you want to get to because you optimize your returns. If you get to a position where you feel that you're king or queen of the market and you get into arrogance, showing off, and recklessness, you can become a gambler, and that is the same fate as spectators and runners will suffer. There are plenty of wildly successful people inside financial markets, and they effectively gamble. You must be careful not to be a gambler. KS zone analysis is very helpful to know if we're gamblers, if we're spectators, if we're runners, or if we're smart money. Smart money inhabits zone 4. Spectators and runners inhabit zone 1 and zone 2. Learners inhabit zone 3. It's vitally important to learn how financial markets actually work. The first critical thing to understand is the role of percentages inside financial markets. A lot of people, of course, understand the role of percentages in the real world when it comes to savings deposits. They look at something like this. Have a look at Sophie. Annual percent yield, 4.4%. Okay, that means after 12 months, 365 days, you're going to get 4.4% more than what you gave them. Oh, sounds like a good deal. Or Barclays, 4.35. UFB Premier Savings, you get the idea. All of these rates will differ, but the concept is we must first know what is a reasonable rate of return. As a rough benchmark, you should at least be making twice as much by investing and trading as you could be by putting your money into a bank. And it all realistically depends on what bank you put it into as well. High-risk banks, they are going to offer you a lot more percentage yield, but it's riskier. Hence, percentages are all about risk. Specifically, inside Zone 3, learners learn all about percentages and what they mean to their hip pocket nerve. For example, if you came across to Omni Calculator, you put in $500 and you wanted that PayPal delicious 4.4% return per annum. That would mean that you would need to put it in for 1 year and you would get 4.4%. What does that mean? That you would grow your balance to a staggering $522 over an elite 365 days. Traders and investors understand different things about percentages. Traders understand they can throw a small percentage gain over a small amount of time and make an absolute fortune that would make investors' eyes water. Investors understand that you need to hold on to get greater and greater percentages. Percentages that would make traders cry, except for the fact that they take so long to get. When we get back to Rule 764, returns are always measured in percentage terms. In Zone 1 and Zone 2, people look at absolute returns. In Zone 3 and Zone 4, people look at percentage returns. I'm going to show you some returns I made by applying the knowledge of the CTKS masterclass. but very specifically that knowledge is focused on LV21 and LV22, these two particular lessons. But please understand, you cannot comprehend LV21 and 22 if you've not done the masterclass step by step. The trades I'm about to show you are also based from a knowledge of the CTKS method service, an understanding of Tier 1, Tier 2 and Tier 3 charts. Without the service, it's incredibly difficult to get synchronized in with the markets. The next thing to understand, all the trades I'm about to show you occurred in a market that looked like this. In fact, this was the market when I finished doing those trades. By applying the knowledge of the masterclass and the structural levels from the CTKS method service, I identified API 3 as a good target. Remember, this was done yesterday in a very red market, and you can see in a little over 1.5 hours, and you can see from here to here, these are the times. You can also see the order numbers and also the amounts. The total amount is just here, 499.99709, this one, amount invested. That's like when we did $500 and put 4.4%. But if you put 499, this particular figure, and then you take the return, which is just here, and you pop them in, that calculator automatically calculates what you're looking for. That was 9.47% return, but it was done not in a delicious 365 days, but in 1.5 hours. Unfortunately, the calculator doesn't have hours, so I had to put it to the next day. But you can see the annualized return on investment is a little bit better than 4.4%. Sorry, PayPal. You will find when you're filling orders, always put limit orders into the market. And you will see that those limit orders get filled at different times because different buyers and different sellers are interacting with it. And you will often find that you will have multiple levels of fills on a particular order. So when you look up here, which is just the sum of those, you can see that 499.99788 and this 547.3833 just in there. This is another 9.477% return and quite a nice annualized return on investment for putting money in for 1.5 hours. That's not 365 days, that's 1.5 hours. There are so many ways to trade, and we talk about that extensively inside the masterclass. Here's another trade on API 3. This is a form of very tight and cyclical trading. Here we see the 499 here, the 532 there, a 6.46% return, and a very neat annualized return on investment. You always want to look at that annualized ROI. Here's another trade that was done yesterday during that really red period. You can see the annualized return on investment is not too bad. One thing that you will find, the market decides the return you get. It's not always possible to get high figures, and you don't need them, because if you're just turning over 5 or less %, you can do incredibly well because you can recycle your money. And you can see here on this API 3 trade, you'll notice the order numbers in here. That was 1.25 hours. For a 5.7% return. You can see inside this trade, there's a little bit of a trade just faded in the background. That's because it's at exactly the same price, and I want to show you how you can turn different amounts from the same price. So what does it look like? Here you can see a different order number, but the same value in terms of the price. What I did was that I bought 2 lots at the same price. One I put up what you just saw, a little over 5%, and this one nearly 10%. There's a lot of ways to trade, and you can see this took 1.5 hours, but the annualized return is really cool. Inside the masterclass, there's so many ways that you can buy and sell. You can go down several levels, you can cycle around, you can do tail trading, you can do so many things. One thing that I absolutely love to do is to recycle money. When you do that, you're effectively using the same amount, the same 500, but you're taking it out of the market in a quick period of time and putting it back in, so you just score the profit. Here you can see in API 3, the same trade. I'm just trading the same token. There's a little over 6% return and a very nice annualized return on investment. But the key is, then you can recycle the trade because it fills very, very quickly. Here's another trade done on API 3 yesterday for about a 6.1% return. Again, the annualized ROI is quite healthy, but the concept is when these trades are done quickly between buy and sell, you can recycle that cash. Here's yet another trade on API 3, and you can see just in 36 minutes, nearly 6% return. Always look to the annualized return on investment. Here's yet another trade on API 3, just a little over 6%, and the annualized return on investment is quite high. At least it's better than 4.4%. Here's yet another trade on API 3, getting up to the 5.9% in 42 minutes approximately. Here's yet another trade in about 42 minutes and nearly up to that 6.5% return and a very healthy annualized ROI. I'll just give you one more because I had plenty more trades on API 3. I was doing tight trade and cycling my profits. You can see that if the momentum is there and you've done your synchronization, you can do incredibly well. Perhaps the easiest thing to understand the distinction between trading and investing is this: traders know how to sell, investors know how to buy, and especially how to hold. One thing that you need to reduce fear, you must understand where the CTKS structure is inside the tier 1s, the tier 2s and the tier 3s. That will give you an incredible insight into anything that's moving and has the volume and the focus that you need. In order to make returns like this, and you can do it because so many masterclass students do it each day, the concept is to get rid of the fear. Do not be a spectator and do not be a runner. What is a spectator? A spectator is someone who says, "Oh, it's too dangerous to go in. Look at the market." When they say that, they're frequently referring to a red market. Remember, all those trades that I showed you were in a red market. The other thing to understand, when you looked at the actual market yesterday, that market was red and I was going long at spot. I was not using any form of leverage and I was not going short. Going long at spot is the safest thing that you can ever do, at least until you learn what you're doing and you know it really, really well. Even then, there's no requirement to go into leverage. You move away from being a spectator and a runner, and runners just run away. When they see red, they bolt. If you've ever run away from the market, don't worry, you're in really good company. Everybody that takes time to go through financial markets and learn has been a runner and a spectator at some stage. So it's nothing to be concerned about. What you want to focus on is getting the knowledge, getting experience. How do you get experience? You start small and scale. I would suggest that you just use coffee money. You're seeking to get a feel for the market, and it doesn't matter what you use, and this is why percentages are important. In those examples, I used $500. What if I was using $50,000 per trade? Or $10,000 or $5,000, it doesn't matter, it's still the same percent. The scaling part is incredibly important, but please don't rush it. Emotional control is incredibly vital. If you don't have emotional control, you will slip into behaviors that just are fear-based. It's critical to have systems. That's what the masterclass is about. And also the CTKS method monthly service. Having your processes as well is very important. Doing your three-dimensional risk management when you enter the trade is vital. Learning how to sell is incredibly important. Investors are brilliant at holding. Traders are brilliant at timing the market. Combining the two is a knockout combination. You don't have to be one or the other. Hey, why not be both? Your process is vitally important. If you don't have the foundations, if you don't know how to collect probabilities, and the CTKS method service has been designed specifically to help you with this level 2 analysis. If you can't find the market's focus, you're in trouble. But before you buy and sell, and there's so many ways to do that, you must master emotional control through positive excellence. If you don't, fear will take over and you will become either a runner or a spectator, and both are non-profitable. The structure that I've shown here is the structure of the masterclass. If you're sick of being a spectator or a runner or a gambler and just want to be consistently profitable, then the masterclass is for you. And Perperatum has very kindly offered a CTKS partial masterclass scholarship. You can apply for that in the links below in the description of this video. You'll find, just as I showed you, it doesn't matter what the market is doing. If you can find the market's focus, if you've got your timing and your synchronization together, it's literally a license to print money. But you must know what you're doing. The key to understand, smart money doesn't guess, smart money knows. And you'll find one of the biggest game changers that you can ever experience is the CTKS method service. When you understand how the engine of financial markets globally is either purring along or spluttering through the Tier 1 charts, and then you cross-reference that to the Tier 2 and Tier 3 charts, what you will get is just pure magic. There are always opportunities inside financial markets. When the markets go green, there are more opportunities, but when the markets go red, just like I showed you before, there are opportunities as well. There is a very big difference between retail knowledge of the markets and smart money. Smart money looks at the markets incredibly differently, and it takes many decades to get that lens. There's a very specific way to think about financial markets. Retail thinks in a way that actually blows their accounts up. Smart money thinks typically opposite to what retail thinking is. The only way to make money inside financial markets is through learning. Then when you have that knowledge, you can apply it and do what I just showed you. Those trades were done yesterday in a red market. That market had plenty of people running away. The runners were out and the spectators were out, but smart money is always there too. My goal is to help you to become smart money. Always keep on coming back to Rule 764. Fear is not your friend. Fear kills your returns. On this return scale, that's 0 right there and then. You don't want to be a spectator. You don't want to be a runner. You don't want to be a gambler. You need to acquire enough courage, knowledge, experience, emotional control, systems and processes to become smart money. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.